Good morning and welcome, everybody. We're certainly delighted to have you here with us this morning. While we're connecting with you online in this way, it is important to reflect on connectivity and connections in general, but especially when it comes to your money and financial matters. At Nedbank Private Wealth and Nedbank Financial Planning, we use our globally integrated and advice-led business approach to connect your financial decisions to your goals and aspirations. That is the reality is that our financial decisions affect our ability to protect what is important to us and achieve our financial goals and dreams. At Nedbank Private Wealth and Nedbank Financial Planning, we make those connections more accessible. We connect you to a global perspective, appropriate opportunities, and access to solutions and services from across Nedbank and other top providers. But most importantly, we connect you to the personnel and objective advice you need to help you make your financial decisions count so that your money can work for you. That is what we mean when we say connected wealth. I'm Andrew MacKenzie. I'm Head of Portfolio Management at Nedbank Private Wealth. I think a lot of your clients, I'm not too sure how many are online today, but I probably have met a lot of you. So welcome, good morning. I just have to say up front that you are working behind screens seems easier maybe to you as the user on the other side, but I can assure you there was a bit of panic and last-minute organizations just prior to going live. And I certainly do miss the interaction and the real-time face-to-face meetings that we have had with you as clients in the past, and certainly look forward to that one day when certainly we can start having some of these meetings and presentations live again. I've also spent a lot of time in meetings with some of you as clients discussing political affairs because of the impact that it has on the country, because of the impact that it has on the portfolios that we look after for you. But as you will all know, I'm certainly no expert on this on these matters that are politically related, and therefore very glad to have JP joining us this morning, where hopefully we'll be able to unpack a lot of this barrage of political news that we have been receiving as of late. I think also it's important that we're going to try and ascertain out of that political noise, what is noise versus what is cause for concern, and what could impact the economy and the future of South Africa, and therefore our ability and our outlook on how we manage your wealth. As you all probably know by now, JP is a self-employed analyst focusing on trends in politics, economics, and demographics, and has been consulting to Nedbank Private Wealth since 2000. I won't cover all of JP's distinguished career and achievements, but would like to note that he has worked in President Mbeki's Economic Advisory Council, and in 2015 was appointed by the President to be a member of the National Planning Commission. I can't think of anyone more appropriate to join us in this discussion today than JP. So JP, welcome. Just a couple of housekeeping issues before we get started. If you'd like to ask a question, please use the Q&A chat box on the left-hand side of your screen. If during the presentation your screen freezes, press refresh and it should hopefully take you back to where you were. You'll also receive an email in the next few days with a link to the recording in case you'd like to share this or watch it again. Please remember that you get more through the thought leadership insights, so the recordings of previous webinars, and find out more about future webinars on our website. Lastly, your views matter to us, so please help us to improve our future webinars by giving feedback in the brief survey that will follow. I'd also like to say a very big thank you to all of you participants and those who submitted some really, really interesting questions. I've lost count how many questions there were, but there were a lot of questions, and certainly we're not going to be able to cover the vast majority of them in the session today. But we have tried to summarize some of the key themes which we'll look to address, and I'll look to spend the first 10 minutes or so answering some of the perhaps economic questions, and then hand over to JP, where I'll ask some of the more sort of political orientated questions. And hopefully towards the end, if we've got 5 or 10 minutes left over, any questions that have popped up in the Q&A chat box, we'll certainly look to address. Okay, connecting the dots. How the SA political landscape affects the economy and your wealth. I think a lot of the questions that we've had leading up to the discussion today, and already one or two of the chats that have popped into the chat box this morning already, have concerned the Rand and predicting or estimating where the Rand might go in the future. I think there's a lot of variable factors at the moment that are impacting the Rand. A lot of lot of points that you actually have to bear in mind. But this is a chart of the rand going back to about 1990 odd, and you can see that basically it's bottom left to top right with a bit of variation in between. Since over the last 31 odd years or so, the rand has weakened at an annualized rate of about 5.5% against the US dollar. That 5.5% is almost an approximation of the inflation differentials between our two countries, South Africa and the US, plus a bit of a risk premium built onto an emerging market country like South Africa. Hence, we would certainly expect the rand to continue to weaken over time when you look at it on a longer term basis. But certainly on a shorter term basis, this is something that we do like to show our clients. And again, clients that have been in meetings with me, this is one of the charts that I do like to show, which is effectively the difference between the inflation differential in the US versus South Africa, which is highlighted by the blue line, and the green line is the actual rand-dollar exchange rate. So what you can see there is that the rand is still roughly undervalued compared to the dollar. We estimate fair value against the dollar at about 12.50 Rand at this point in time. It's certainly not what economic models are projecting. And when you look at what our economic group forecasts are showing for the rand at the end of the year, it's probably closer to the 13.50 Rand mark. What I would like to highlight in this chart is that there is potential for the rand to continue to strengthen, certainly in the short term, particularly when you start looking at things as what's happening in the US, more as a driver of the weaker dollar as opposed to really a stronger rand. So just something to bear in mind, but certainly the case for a strong rand over the real long term is impossible to make, just given the fact that there is an inflation difference, and therefore we need more rands at the end of the year to buy the same amount of goods, given that inflation is higher in this country compared to the US. We also got a couple of questions on interest rates in South Africa and what we expect on interest rates going forward. The green line there is the repo rate, which the Reserve Bank obviously controls. The blue line is inflation expectations 2 year forward, which is basically set by the bond market. And that sort of darker grey line is the core CPI index with a black straight line across the lower parts of the chart, the 4.5% target of the Reserve Bank. I just wanted to show you a couple of things from this chart. What the Reserve Bank did during the height of the COVID pandemic, cutting interest rates 3% to record lows. But even with that cut, the prime rate is still sitting at 7% compared to core inflation sitting between 4 and 4.5%. So we still have real rates in this country. The same chart for the US, which I'll show just now, has negative real rates in the region of 3%. That is still very much supportive of the ZAR. We've also had questions around quantitative easing in South Africa. I'm not going to say that it's not impossible, and certainly there might be calls in time to come for the SARB to fund some of government fiscal spending. I don't see it in the foreseeable future, but the bottom line is developed markets basically hit zero bound. They can't really cut interest rates below zero. There has been some talk on experimentation of possibly doing it, but certainly when you look at South Africa, with our prime rate at 7%, there certainly is still expectation to cut interest rates from there, should we need to, before we start thinking about things like quantitative easing and so on. The one thing that I would also like to highlight from this chart is the blue inflation expectation line. It certainly seems very well contained. And in this kind of environment where inflation is contained, plus we have a large negative output gap in the economy, given that growth has been slow over the last decade or so, it means I think that there's a lot of catch up in the economy before we start hitting supply constraints. So certainly as a house, we're not too concerned about inflation, but we all do know that the SARB, it's only really got two tools available to it. It's like a dog guarding a house. It can bark and scare off would-be attackers, or it can actually pull out the gun and possibly shoot. And I think the SARB's obviously going to bark first and make a lot of noise about inflation and the fact that it is its mandate. And certainly we would expect the SARB to continue to do that, with possibly 1 or 2 small increases early on in the next year. But to go back to where we were prior to the COVID, that's certainly not in our base view, because we don't think inflation is a concern at this point in time. Another reason why we don't think inflation or the SARB needs to rush to hike interest rates is this chart over here. This shows lending. The green line is private sector credit extension, and the black line is mortgage advances. The bar charts are F&B consumer confidence. If the bar charts are positive and above zero, the consumer is feeling good about life. If it's below zero, the consumer is feeling poor about life, is not feeling great about life. And given our economy is largely 65 to 75% driven by the consumer, when the consumer is feeling good about life, it really does have a major impact on the economy. The fact that the consumer is not feeling great about life is reflective of the poor lending and advances in the economy. Banks do have cash available and are looking to lend. So I don't think it's a question of the banks so much wanting not to lend. It's more a question of the consumer's ability to borrow in a low confidence environment. And part of that low confidence environment speaks to the government debt. And we do have some more questions on this, which I'll possibly look to throw to JP later on during the session. But just to very quickly highlight, the black line there is the debt to GDP ratio. And at that kind of trajectory, fast approaching the sort of 90 to 100% level, we all know that it is just clearly unsustainable and that interest rates are now starting to take a far bigger portion of the revenue generated by SARS. So it really is a concern for the economy and a question that I'll direct at JP later on. Before moving on to JP, I think there's one last thing that I would like to cover, and that's the Fed, and certainly the US is still the largest economy in the world, by far the largest economy in the world. We forecast in the US to grow approximately 6% this year, and it's largely a reflection of what the Fed and particularly the government in the US is doing to combat inflation. The Fed, as you can see, there's that black line, cut interest rates back to zero again, as they did during the height of the global financial crisis. And I'm sure a lot of you would have seen and have heard that the Fed expect interest rates to stay lower for a lot longer, even though that blue line there you can see, which is core CPI, spiked up to close to 3%, which is above their mandate. I think the market believes them when you look at the green line, which is the market expectations of interest rates in the US looking forward 5 years. And the reason why the market believes them is that I think that the Fed has built up a lot of credibility, A, in terms of inflation fighting, but B, also because of their dual mandate where they also have unemployment. So what you're going to see is I think the Fed's going to continue to hold interest rates at the zero bound level. They're going to continue with their quantitative easing program. They would have learned from 2013 about tapering too early before the market is ready. And they've said that they're basically going to hold interest rates at the zero bound level until inflation has caught up and unemployment is back to those kind of levels that we saw pre the global financial crisis. So expect globally interest rates to stay lower for longer, which will also be supportive of the rand. This is just an unprecedented chart of the support that global central banks have provided to markets in particular. When you look at the ECB, which is the green line, the Fed, the red line, and the Bank of Japan, the brown yellow line. I think since COVID, they've probably thrown about $11 trillion into their respective markets compared to around sort of $3 or $4 trillion at the height of the global financial crisis. So really what we have seen, well, A, is learnings from the global financial crisis, but certainly unprecedented financial stimulus from some of these major central banks to support the economies. And we are now starting to see the benefits of that. As I mentioned earlier, US starting to show or reflecting very strong growth for this year. And even Europe now is starting to have growth improvements and forecasts starting to pick up. And you're starting to see that reflective in a stronger euro as well. We also got questions on the all share and markets. And again, this is quite a nice chart, just bottom left to top right. This is a chart of the all-share index going back over the last 30-odd years. Over that period of time, the Aussie's given an approximate return of about 14% per year. That's despite all the sell-offs. And on the top right there, you can see the COVID sell-off where the world almost felt like it was coming to an end and markets tanked over 40% during that period of time. But stripping out that volatility, we can see that the Aussie has actually performed quite well over that long period of time. And certainly there will always be noise, and some of these political issues that we'll talk about now often create some of these opportunities that give us longer-term buying opportunities in our markets. In terms of US versus onshore, we also got a lot of questions around whether we should be taking more money on or offshore at this particular point in time, given how strong the rand is. Certainly, there is a case for taking more money offshore, but we do like to look at each client in their own unique individual circumstance to determine the appropriate amount to be taken offshore. But certainly, I wouldn't say the US markets or developed markets are one-way bets against the rand. And our all-share market, as you can see in the first part of 2000 to 2010, the green line is the all-share index. It returned 13% per annum over that period of time, whereas the S&P, when measured in ZAR, actually returned a minus 0.6% over that period of time. Obviously, since 2011, we've had a very strong very strong offshore markets, particularly the US, which returned 18.5% per annum when measured in ZAR, versus Aussie, which only returned 7.2% per annum. The reason I put this chart in here is just to remind certainly investors and ourselves that offshore markets, in our view, are starting to look a little bit more expensive, but more than likely will remain so, given the financial support. And here you can see a longer-term cyclically adjusted PE, which does show the US market in particular approaching, I'm not going to say expensive levels, but certainly more expensive than what we've seen over the last period of time. And that is, again, more a reflection of some of the quantitative easing and the fact that interest rates are very low and will continue to remain low in the US. So those are just some of the charts that I have covered. And sorry, if you can just bear with me for 1 second while I just find my notes, and would like to look to bring in JP at this point in time. So as I alluded to earlier, JP, welcome. Thanks for joining us this morning. JP, as I mentioned in the introduction, we've had a lot of questions from clients that cover a wide range of various political issues. So hopefully we can spend a bit of time today unpacking some of those issues. Quite a number of those questions actually refer to your book that you published in 2013 called The Long View. And some of the questions from our clients are, since you wrote that book 8 years ago, have your views changed since then? And if you were to write that book, would there be anything substantially different?
Thank you, Andrew. Thank you and good day to everybody. It's nice to be with you again. Yes, and as Andrew has said, thank you to all of you who sent in questions. A whole wagon load has come in, and we'll try our best to deal with it. On the book, Andrew, in 2013, the book basically made 3 points. You have to have economic growth higher than population growth. Now, I think that is still valid. South Africa has failed on that the last 6 years. Basically, from 2015 onwards, Mr. Zuma's second term, population growth was higher than economic growth. And then last year came COVID that really knocked the stuffing out of South Africans' incomes. And in general terms, at the end of December, we were 11% poorer than what we were in 2014. That's a big whack. That's a big whack. That's why you've got the debt to GDP ratio problem. That's why you've got a fiscal problem. That's why you have unemployment and so on. So I think the point that the book made at that time, that population growth and economic growth are important measurements, that has been proven correct. And so on that score, South Africa has failed for 5-6 years. The second point the book made was we have to remain an open society. An open society is one that is capable of adjusting and correcting itself. And boy, did we see that big time with Mr. Zuma. Cyril Ramaphosa would not be president of South Africa today if it wasn't for open society forces. I think that's quite clear. It's also quite clear that if you compare the ANC, for example, to the Republican Party in America, those of you who follow Republican or American politics, Zuma has been ejected from the ANC much more decisively than Trump has been ejected from the Republican Party. So open society dynamics has really come through very, very strong. So one down on per capita incomes, one up on being an open society. The third point that the book made was that a society must be able to unlearn and relearn. And in the book, I used the examples of Afrikaners and ANC people Afrikaners had to learn to move from groupthink to accepting individual rights, embracing the individual as the core of society, and most Afrikaners made that move. On the ANC side, they had to move from a socialist view of the economy to much more of a market-orientated view. And that happened. By 2013, that was already well documented, and I think it still holds. What encourages me a lot about South Africa at the moment, I think we're going through an unlearning and relearning process in respect of corruption. If you just see what has happened in the last 3 years in fighting corruption, something fundamental has shifted in our body politic. If you will excuse me for using the word, but voters are simply gutful of corruption. And you see it coming out all over the show. And that to me is a very strong expression of this unlearning, relearning dynamic. So yes, I think I would still write a 2013 book, but I'll have to point out that unlike 2013, when we had a long run of rising incomes, we now have had 6 years of declining incomes. The open society is stronger than ever before, and I think the relearning and unlearning process is playing itself out.
Yeah, thanks, JP. Just a friendly reminder, we did agree prior to the session that you did have to say one negative thing on this on this presentation today, and we had some clients specifically requesting that. You made some interesting points in there, and one of them that I potentially would like to pick up, I know it was one of our questions for later on, where you mentioned the GDP per capita growth, which has fallen, I think we calculated 36%, now sits around $5,100 per person. But that is something that the rating agencies have sort of ticked off as one of the reasons for the recent downgrades. And it's certainly a trend that is going in the wrong direction, given that obviously population growth seems to be faster than what GDP growth is at the moment. We all know what the answer is, essentially, in terms of growth. And I think the question to you is, given this decline, structural decline in GDP per capita, what is government doing, or how can we get back to structurally higher levels of growth to ensure we stop that negative GDP per capita growth, something which is really key that the rating agencies keep a close eye on?
Well, Andrew, as you say, our decline over the last couple of years was due to structural reasons, and the only way you'll get out of it is through structural reform. There's no other way out. Now, fortunately, certainly the President, certainly the Minister of Finance, the Treasury, appreciate this point very, very strongly. You can just track what they say, and you can track what policy positions government is adopting. So let me give you an example. In 2018, Tito Mboweni released the so-called Treasury document, in which he spelled out a lot of structural reform measures. The document was condemned from all sides. Now it's about 20 months later, and what we now have, that document is not only now official government policy, there's also an implementation agency in the presidency reporting directly to the president on progress with that structural reform. So I'm very, very comfortable that politically speaking, there's strong support for structural reform, difficult as structural reform is. And where will the structural reform then be? It'll be in energy, it'll be in infrastructure, it'll be in spectrum. And there will be other measures as well, but those will be the three big game changers. And just while we're on the point, this year, population growth will be 1.6%, Andrew, but everybody now expects the economy to grow more than 4%. So 2021 could very well be the first year in 6 years that we actually trump population growth by a wide margin. So the question is no longer 2021. The question now is 22, 23. What's going to happen then? And if these structural reform measures on the table are being implemented, I'm quite optimistic that we can reach again 3% or thereabouts in future years, which is comfortably above population growth, and we can go back to the road that we had in the time of Mbeki.
That's great to hear. And I think part of the issues that we have and what we see from political commentators or other political commentators and analysts, when you look at forecasts, the newspapers, etc., is, yeah, sure, we've got a strong rebound this year. in the region of 4. I've seen upwards of even 4.6, 4.7% growth for 2021. But that's obviously a reflection of what happened in the last year. It's when we start looking at years 22, 23, 24, where we start seeing growth sort of merging back towards the sort of 2 to 1.5%. And I think that's really the worry, and obviously what you're referring to there in terms of infrastructure, creating that capacity in the economy to ensure that we have the infrastructure to enable growth, or certainly to grow closer to the 2.5% to 3% comfortably ahead of inflation that you referred to there. JP, there was also quite a lot of questions around prescribed assets and the rating, as some political commentators or newspapers like to refer to it, rating of the retirement and saving industries to fund some of these, I'm not going to call them defunct state-owned enterprises, but certainly we've got a lot of questions around that, whether you think that we will have prescribed assets in this country in time to come, and if yes, what form would they actually comprise?
Andrew, no, that is just noise. Already at the end of last year, we got very, very clear signals that both the government and the ANC have moved away from prescribed assets. It was confirmed in February in the budget when the new Regulation 28 was tabled. Just for our viewers' interest, Regulation 28 is the one that regulates where pension funds can invest. And if there's prescribed assets, it'll come through that regulation. And it's quite clear which direction government is heading. They're heading in the direction of let's use the country's savings via the savings market, via the capital market. That's very, very far away from prescribed assets. I think the ANC and government, as I've said, have both shifted their position. For a long time, the ANC flirted with prescribed assets. I think COVID, the fiscal crisis, the fact that there simply isn't enough cash going around, have moved the ANC to the point where they're saying, well, then let's team up with the private savings industry and use their money for infrastructure, for energy, and so on. And the numbers this year on that score is coming through big time. You would have heard last night that Pravin Gordhan announced Transnet is going to do 3 big projects with the help of private sector capital. That's exactly the kind of thing that you want. You don't want prescribed assets, you want that kind of partnership. And that's where things are going. In the beginning of April, the president announced that Durban Harbour will be upgraded by an amount of 100 billion rand. That will be a private sector investment, jointly with Transnet. So that's the direction it's going. There's actually quite an interesting thing that happened in Parliament last week. The DA brought a suggestion or a proposal that the Pensions Act must be changed so that workers, members of pension fund, can access their pensions and draw it in times when they fall when they suffer hardship. It was the Treasury and the ANC who said, no, we're not going to fiddle with the country's saving system. We are dependent on good savings. We are dependent on strong savings. Let's preserve it. 1 or 2 ANC MPs came out with the same noises as the DA, but in the end, the proposal was rejected. So, no, I think that little interaction in Parliament last week tells you clearly where the government stands, where the ANC stands, and what we're going to see is more partnerships and not prescribed assets.
Yeah, that's great to hear also. You did mention 1 or 2 interesting points there around Transnet, infrastructure, etc. But it's talk. And when Ramaphosa first got elected, we had a big spike up in South African risk assets on the back of what we have referred to as Ramaphoria, but it was kind of short-lived because although he had good intentions, he's obviously got shackles from within the ANC that are possibly in some ways preventing him from implementing some of his economic initiatives that he was certainly looking to try and implement. So I guess my question is, I don't think the markets appreciate or believe it yet and are almost waiting for concrete evidence before buying into this idea of some of this private partnership initiatives with government. So, yeah, we all read about it, but are these real events? And do you foresee some of these events, particularly like the Transnet issue, for example, that you referred to? You mentioned Spectrum, etc. We've still got issues with handing out licenses. They just seem to drag on for a long period of time. And the markets almost look like they've given up on 1 or 2 of the on one or two of these initiatives?
I think you're absolutely right. Markets and rating agencies, there's no deep appreciation for the route that government has chosen. But your best forensic evidence, and it's all there in the public domain, is electricity. If you compare where we are now with electricity to where we were in February 2018, when Ramaphosa became president, it's about, 38 months ago, we've traveled a long, long road. Now, I know people are hung up about load shedding, absolutely. I know people are now hung up about the 50 megawatt story. Next week, when that is solved, when 50 megawatts are resolved, then they will be hung up about something else. But just compare, take a long view and compare today with 2018, and you will see that the total electricity industry is being turned around on its head. The announcement last night again that the legalization and separation out of the transmission company by Eskom is on track for the end of this year. It's an enormously important announcement. Now, I think, Andrew, my experience with the, as I like to call them, the chattering classes, is that they like to chatter but not to read. And over time, they will catch up with these developments, and then prospects will change. But you're quite right, we're not there at the moment. Although, as some of our colleagues point out, Graham, for example, points out the fact that the rand strengthened, tell you that some people are picking up on these things. But in general terms, you're right. And that also answers your previous point about not what happens in 2021, but what happens in growth in 22 and 23. And as I said, it's all dependent on structural reform. Now, let's just take one example. The net investment in South Africa, if you take gross investment and you minus depreciation, which is a nice conservative measurement, the net depreciation in South Africa is about 200 billion a year. Or to put it differently, in 5 seconds, it's 31,000 rand. That's what 200 billion a year is, 24/7. Now, electricity investments that are picking up at the moment is equal to more than 150 billion rand. Now, spread that 150 billion over, say, 3 years, then you will still agree with me, even at 50 billion a year, you're increasing the 200 billion by an enormous amount. You're adding a huge amount of money to that 31,000 rand a second. And that's where growth will come from. Yeah. And it will come via electricity, number one. Water is the second biggest area. The water projects currently on the go add up to about 106 billion rand. And then you've got infrastructure and roads and so on. I have no doubt whatsoever about the direction the government is going in. And let me just say this for our viewers. We are quite lucky, Andrew. This week, last week, this week, and next week, the budget votes of the various government departments are discussed in Parliament. There's a treasure trove of information there. It's a pity it doesn't get out into the public domain. It's public, it's Parliament, but it doesn't get reported. And clients will do themselves a favor if they actually read the budget speeches and come up to speed with where government is. There's no question which way we're going. The way that we're pursuing is the difficult way of structural reform, not just lower interest rates and tax cuts, which is happening in the rest of the world, structural reform to improve productivity to give you growth. That is the road South Africa is currently on, thanks to Ramaphosa.
That's great to hear, and let's hope that we can start getting some traction in the markets, and obviously some of these start seeing it reflected in some of these GDP forecasts. JP, we were talking about Eskom there, and you mentioned Eskom a couple of times, and it was obviously one of the questions, or a lot of questions that we had around clients, given the sort of impediment to growth that Eskom has actually become. But I guess we've got to take our hats off to De Ruyter for what he has achieved so far there. Possibly one of the hottest jobs in the country. I'm not sure a lot of us would want to put our hand up for that kind of job. And certainly now reading between the lines, I was going to ask a question about some of his successes. And last night, I'm sure a lot of you would have seen the reduction in Eskom debt. And one of the questions that I was going to ask was the splitting up of Eskom into 3 different entities. A, whether that was a feasibility, and B, what it would actually look like, and C, how it would actually help Eskom as a whole. And then again, last night we got some sort of commitment from government with regards to splitting up of Eskom. So, yeah, I don't know if you could just shed some insight into what the potential future Eskom would look like, split up into the three companies, and whether that is a possibility given the pushback that government's going to receive from the likes of NUM, etc.
Look, the critical date for the breaking up of Eskom was February 2019, more than 2 years ago. That's when the president announced it. That's when there was a huge reaction against it. And now, 2 years later, it's quite clear that it will happen. As you said, the dates now is the end of this year for the transmission company, and then the other two, generation and distribution, will be separated out next year. Now, what does it mean for Eskom? Andrew, in short, it means that the model of an integrated utility, which we've now had for almost 100 years, that model is coming to an end. It means that the transmission company will buy power from anybody that produces the power at a reasonable price. They will also buy power from Eskom power stations, from those stations that can actually produce it reliably and cheaply. If I must make a prediction, I would say that in 5 years' time, 6 years' time, the name Eskom will only mean the transmission company buying power from various producers and distributing it across the country, transmitting it across the country. I think most of the Eskom power plants, those who are not closed down, will probably move into some kind of a joint partnership with, again, private sector players, and they will put up renewable energy plants. The minister announced last night that the Komati power station, which is near Middelburg in Mpumalanga, will be the first pilot. And what you will find is Eskom owns the land. The power station is now old and obsolete. You can sell it for scrap. But take the land, put up a renewable plant so that you can employ people, keep local businesses in Middelburg going, and you produce and sell your power to the transmission company. That's the model that has been set out in the Eskom roadmap. It's all in public. It's all there. And I know a lot of people suspect Pravin Gordhan from being a communist and wants to control everything and so on. The poor man, for all the labels he has to suffer. But he articulated the vision very simply. He said, we want to get to the position where the South African power consumer can choose from whom he wants to buy his power. That's the way it works in the UK. That's the way it works in the US, the way it works in the Netherlands, and so on. And critical to that is you've got to take the transmission company out of Eskom. And that is now happening. So this change is a big story. It is also a significant political achievement. Why do I say that? When Ramaphosa announced this splitting up in 2019, I came across two reactions. The one reaction, no, this is a bad idea, mustn't do it. And there's still people opposed to it. The other reaction was, no, this is a good idea, but it'll never happen. There are too many vested interests. The singular achievement of the Ramaphosa administration is that they've overcome most of the objections. You've referred to NUM. NUM is on side.
Yeah.
This week, Monday, we had the Secretary General of COSATU saying we must have 50 megawatts of own power generation. Now, COSATU would never have said a thing like this 2 years ago over their dead bodies.
Yeah.
So somebody has worked very hard to bring the bulk, the majority of the body politic along. You know, we forget that there was a time when Tshwane and Joburg, where I stay, where the highways were blockaded by truck drivers who said, we can't do this renewable thing. There was a time when there was high court actions in the High Court in Johannesburg, all the way to Bloemfontein to the appeal court to try and stop the introduction of renewables. All these resistances have been overcome. And I regard, apart from the budget, which I think is really sound, I regard the energy decisions as the most significant political achievement of the Ramaphosa administration. And that's putting the country on a new growth path.
Yeah, I think there are a lot of us that do agree with you on that point, which leads us into the next question. And I think a sort of more longer term concern that has been raised, again, by a lot of clients in the questionnaire is what happens if Ramaphosa doesn't get his second term? I guess the question is, will he get a second term? And what is the risk of a lot of this good work being unwound if he wasn't? So, but I think you've answered the question. If you can just maybe give some insights as to why you think he will.
Look, two very simple data points. When he was elected in 2017, it was by a narrow margin of 179 votes, 52-48, if you work with percentages. By the way, it was a bigger margin than with which Ace was elected, but leave that. I don't think there's anybody in South Africa who would still say, except perhaps Ace, that a president still sits at 52-48. I mean, you know, we can have an argument, is it 75-25, is it 80-20, but there's no question that the man is in charge. How do we know he's in charge? Because Ace Magashula told us. When he launched his court papers, he said the ANC is dominated by one faction. Well, it's not his faction, it's the Ramaphosa faction. So he tells us Ramaphosa is dominating the ANC, and this dominant faction is doing all kinds of nasty things to me. So don't take my word for it, take Magashula's word for it. He's been properly clapped, and they haven't finished clapping him. They will clap him some more, but they will do it systematically and as it suits the president. The one thing I think we must learn about Ramaphosa, he only moves when he knows he can win. Never underestimate his strategic ability to look around the corner. And I think Ace has discovered that. A lot of investors still don't appreciate it. Until about 3 months ago, 4 months ago, what was the narrative? The narrative was Ramaphosa can't make a second term. Now, you'll know, Andrew, I've always dismissed that because the empirical evidence is just too much. If you look for it, you see the evidence. So now he will get a second term, subject, of course, to things like health and security and so on. If he gets shot or whatever, well, then he won't have a second term. But I think the second term is sorted. The second thing that I think is very important, and this links back to your first question, we're back at learning, unlearning, and relearning. I want to make brave and say that the ANC under Ramaphosa, or let me rather say Mr. Ramaphosa, is taking the bulk of the ANC from one view of the world to a particularly different one. Well, we've quoted the example of corruption, but we've seen it with prescribed assets as well. I've just quoted you the example of electricity or energy. We're seeing it in public-private partnerships in traditionally state-run functions. The man is busy with a generational task of unlearning and relearning the thinking inside the ANC. And I don't think there's any other political party in South Africa that is working so hard to get their followers to see things differently than the ANC. And I'm going to say that again. There are 14 political parties in parliament. The ANC is the one that's doing the most to shift its own followers from one worldview to another. And that, I think, is the long-term answer to your question. When you end up with a party that thinks fundamentally different at the end of Mr. Ramaphosa's, what will it be, 11 and a half years, that he would have been in a position, you're dealing with a different animal. You're not looking at a kind of a Republican Party or even a Conservative Party in the UK, which is stuck in the rut. Yeah, you're not looking at that. It brings us back to the point of an open society and relearning and unlearning. I think it's taking place big time.
Yeah, again, that's great to hear, and certainly we are starting to see more and more evidence of that over time. As we alluded to earlier, I just think the markets possibly expected a little bit too much too quickly, and possibly lost a little bit of faith in Ramaphosa. But certainly, when you look at what's happened politically and how it's starting to stack up in his favor, I think that's possibly also one of the reasons why the rand is starting to get a little bit stronger. Is certainly the markets are now starting to have a little bit more faith in what Ramaphosa is actually trying to do and is achieving. To change tack possibly for a minute or two, and again, a lot of questions around the EFF. COVID seems to have kept them a little bit quiet. I don't know if it's just me that I don't read News 24 as much as what I used to. It's just I got tired of that noise that you like to refer to. But we do have municipal elections in October, and there are some questions around how well you think the EFF might do. Is 25% a real possibility? And then obviously longer term for the general elections in 2024, what your kind of view is on EFF and gathering support over the next few years?
Look, I think the EFF is in a spot of bother. In the latest round of by-elections we've had, they've shown absolutely no growth. Even in places like Limpopo and Mpumalanga, where you would expect them to do well, There's a little bit of growth in the southern parts of KZN, but that's about it. In the last election, the EFF got 10.77% of the vote. Let's make it 11. I think on current data, they will be hard-pressed to improve on that number. I just think the majority of South Africans are not into the kind of disrespectful, aggressive, and quite frankly deceitful way that the EFF is going about. That's just my observation from the side. I think the same goes for most political parties. I think opposition parties are in trouble, the DA as well. In the last election, the DA got 27% of the vote. I really don't think they will get that again. So as things stand now, I think the ANC will probably occupy 50 to 55%, more or less, and the other 13 parties in Parliament will share the rest in smaller numbers. Your part of the world, where you come from, watch the IFP. They're really just not dying. They keep on coming back as soon as people write them off. And they may very well give the ANC a bit of a skrik in KZN. But I think the EFF, particularly when corruption comes into the frame, I think the EFF may find that it's not that easy to have the growth that they enjoyed in the first few years.
Mm. And you can never have a conversation without bringing the word corruption into it as well. And certainly there are a lot of questions around corruption and what the ANC government is doing. Obviously, there's some clear indications what has been going when you look at the likes of ACE, etc. But there are also quite a few related questions to the Zondo Commission. And I think questions around when can we actually start to expect to see people in orange overalls. And I think there might be a bit of a misunderstanding potentially around what the Zondo Commission is actually set up for. So if you could maybe just spend a minute unpacking exactly what the Zondo Commission is, its task, and what we can ultimately expect from some of their findings in time to come.
Well, I think the important point to note is that the Zondo Commission has made no findings yet. Everything that we've heard from the Zondo Commission is evidence from witnesses who came to give evidence, some of it under cross-examination, some of it not under cross-examination, and the judge hasn't made findings yet. He will do that in his final report. And once you've got findings, you can then move. Secondly, I think the Zondo Commission has already paid for itself. It's costing the taxpayer R1 billion so far, while you've heard that McKenzie, for one, has now repaid 1.8 billion, $1 billion to Eskom and 800 and something million to Transnet. Deloitte have paid back money. SAP have paid back money. I think the Zondo Commission, before they even make findings, just through public pressure, just through open society dynamics, have already paid for itself 3 or 4 times over. So I really don't buy the criticism that we're not seeing value for money from Zondo. I think that's nonsense. But it's very important to note that they haven't made any findings yet. That will come, and then you will see reaction. Andrew, the other point I think we need to make, we are fixated with orange overalls, and that's fine. That's fine. But we mustn't in the process miss the real trick. The real trick for me at the moment, the place where the action is the SIU, the Special Investigative Unit, with its own tribunal of, I think, nine judges. There's not a week going by where the SIU is not freezing somebody's assets somewhere, and the assets then, by order of the tribunal, being forfeited to the state. Not a week goes by that doesn't happen. Now, for some reason or another, we don't pay the same attention to that than what we do to orange overalls. Orange overalls, it's criminal law. You've got to prove everything beyond reasonable doubt. You look at the Zuma saga. Hopefully, I don't know what's happening this morning, but hopefully that will go a step forward. Criminal proceedings takes time, and it'll happen, the wheels of justice turn slowly. The real action is with the SIU and its tribunal. And I really want to encourage viewers to take note of that. I have a researcher that's working only on corruption. We log every single case. And it's amazing how big those Excel spreadsheets have become. I did an update in August last year. I did an update in August 2019. I'll do another update this coming August, maybe a little bit earlier. But the volume of actions that are being taken at all kinds of levels is really enormous. And of course, the biggest one symbolically was in March this year, 2 months ago, when the ANC decided that those who are charged must step aside. Yeah. And they're busy stepping aside. You know, in your province, the deputy leader of the ANC has stepped aside. Your lovely mayor that you used to have in eThekwini, you know, she's holding on like hell. But they will all go. They will all go. That's the way the ANC operates. So the ANC is catching up. The state has been doing its bit for a long time already because it falls under the control of Ramaphosa. And I think we are seeing accountability. You know, if you just think through it a little bit, you're an aspiring ANC politician. You don't have a particular qualification. You can't be in business. You can't be a lawyer. If you're stripped from a position of power and if you sort of discredit it, it's very difficult for you to make ends meet. People hold on to their positions because that's the only income they have. Yeah. Take that income away because in some way or another you've taken action against them, you're inflicting damage. Not as much damage as going into orange overalls, but you inflict damage. So watch the space of the SIU. That, I think, is where the real action is at the moment. The NPA will, in their own good time, will decide when to prosecute criminally, and then that story will carry on.
Great, JP. I'm just giving you a friendly reminder. We are starting to run out of time, and you're yet to say you're negative. There are quite a few questions that are starting to
I did say that for 6 years we didn't grow our per capita incomes. That's a big negative.
I'll gladly take that. I'll share your view on these matters. So there are quite a few questions that are coming through. We'll possibly look to try and get to one or two of them in the next minute or two. But I think there was a lot of questions submitted on the municipalities, and I mean just the record that they got from the attorney. Sorry, I'm just trying to find my notes here. I think it was 18 out of 257 municipalities that received a clean bill of health, while they noted that there was approximately 32 billion rands worth of irregular expenditure. Bottom line is, unfortunately, we live in a reasonably good municipality according to the press reports, but when I see the service delivery that we get, I find it hard to believe. Essentially, municipalities are failing us with basic service delivery. And I think we're certainly starting to see pushback from some of these communities who are getting a bit frustrated with service delivery. And it is a bit of a concern that we're starting to see on the ground, and particularly in some of these larger metros where obviously it's a key to how government implements its policy. So I'm trying to understand, does government have a plan for some of these larger metros and municipalities to try and improve the situation and get basic service delivery to where it should be?
Well, this is the ideal place for a negative comment here, Andrew. I don't think anybody knows what to do with local government. I've recently read up a little bit about local government in China. And in China, the local government people, what we would call the mayor and the city manager and so on, are appointed from Beijing, and they report to Beijing. And if they don't perform, Beijing deals with them. Now, that is not the way our local government works. That's not the way the Constitution has set it up. It's the local voters who decide, and they decide who fulfills what role. So in the end, I suppose the answer to your question is, what are the local voters doing about their municipality? Now, I'm not hopeful that we will see a strong political reaction simply because the opposition parties clearly have not been able to capitalize. What I'm more hopeful about is the kind of thing that we saw in Maritzburg, in the Northern Cape, in Koster, in the Northwest Province, in Sannieshof, in Harry Smith in the Free State, where local citizens come together and with the help of the courts, simply take over things like the waterworks water and sewage works, where they take over the payment of electricity bills to Eskom so that Eskom doesn't cut off the power. That's the kind of way that I think the pushback is playing out. And that must be welcomed. That's once again an open society dynamic. It's once again that learning and unlearning thing. It would be lovely if the voters of South Africa turn against their municipal leaders in big numbers. And who knows, maybe that happens in October, I don't know. But it's ultimately the decision is with them. The decision is not with Pretoria or the provincial capital. It's not like China. Your question is, what a government's plan? Governments has had a lot of plans. None of them seem to be working. When Pravin Gordhan was the Minister for Local Government, he introduced a program called Back to Basics. Well, it wasn't a very long time, but it hasn't really given us dividends, has it? The president at the moment is very strong on the sort of district development model. Personally, I'm skeptical. We'll have to see how that works. Mrs. Zuma sounds very stern when she appears on TV and wags her finger and so on. It doesn't look as if that's having an effect. So local government is a big problem. And I remember many years ago, a local government expert telling me that in his opinion, he was involved in designing the local government system for South Africa. And he said, look, let's just be honest. We developed a system that cannot work. And maybe that's the reality. Maybe we have to go back to the Constitution and just re-look the whole local government thing. On the positive side, I must just point out that about 80% of the country's GDP is produced in about 30 or 40 municipalities.
Yeah.
Let's not forget that perspective. So, if you live in Durban, I live in Johannesburg, some people live in Cape Town. There, the services are reasonable. We're stumbling along. And that, from an economic point of view, those are the important centers. 80% of GDP are produced there. Now, of course, that 80% number doesn't help you if you live in Koster and you've got no water. Or you live in Harry Smith and your power gets cut off. Then you don't want to hear a number like that. But it is something to bear in mind. Something else to bear in mind is a number that comes from Andre de Ruyter. And it was quite astonishing. He made the point that in terms of debt to Eskom, only about 6% of municipalities in South Africa are delinquent. The rest, which is more than 90%, are actually more or less keeping up with their commitments. So we sometimes focus a lot, which we must, that's right, on the things that don't work, that we sometimes forget the things that actually do work. It's a normal thing of life.
Yeah. No, great, JP. I am conscious of time, that we seem to be running fast out of time. There are a lot of questions that have come through. Maybe if you can just comment just very briefly, a lot of questions around key man risk with Ramaphosa. He will take over from Ramaphosa if something had to happen to him in interim, and would they obviously continue with some of his policies? Key man risk, potential successor for Ramaphosa?
The key man risk is substantial, and that's why I'm very happy to see him being protected the way that he is. I know it's annoying if you drive on the road and this whole cavalcade comes past you, but I'm happy that they protect him. I must just rectify one perception. A lot of people think that we are like the American system. If the president gets shot or dies or whatever, then the deputy president takes over. That's not the case at all. Our constitution is quite clear. The deputy president in that case must step up and he must act as president, but within 30 days, Parliament must choose a new president. So it is not automatic that Mr. Mabuza will become president. In fact, I don't think he will. The ANC caucus will meet in Parliament. They will identify a person, and that person will then take over. Who it will be, I really don't know. For the time being, as long as Mr. Ramaphosa goes for his morning walks and stay healthy and he gets protected, he's our man for the next 7-8 years to come. Let's then see who succeeds.
No, great. Thanks, JP. I think just also from my side, I'd just like to add one final comment in closing. And I think a lot of people, particularly when I meet with clients, that we tend to forget is that South Africa is an emerging market. And when you're a foreigner sitting on the desk in London or New York and you're pushing a buy or sell button, you're stacking up South Africa against countries like Turkey, Brazil, India, Russia, Mexico, etc. I think Ramaphosa in particular stacks up very well when you look at some of the presidents and leaders of those other countries that we often get compared to. So an emerging market is inherently more risky than a developed market. So if something is inherently more risky, you would expect over the longer term a higher return to compensate you for that extra inherent risk. So I think the key question that we as investment managers obviously have to focus on, and what we've tried to unpack today, is the noise. And what is noise versus what has a direct and real impact on the economy, and therefore how we manage portfolios. And often this noise does create investment opportunities, because we know, as we all know, that return is essentially generated by the price that you pay. So often instances like this, the noise that is created means that market valuations in a country like South Africa are lower, which obviously enables a higher potential return because your entry point is lower. So I think it's something that we grapple with. We're very fortunate that we have JP in our morning calls every morning. He joins us on our monthly strategy sessions. So it is very much part of how we actually manage money in our investment process. And I think also the noise, we already squarely in the investment junk category status by the rating agencies. 2 years ago, we were talking about downgrades, etc. Now we're 3 notches below. We are squarely in the junk category status, and hopefully in time to come, we can possibly even start having conversations about being upgraded. But the question is, can the noise get better? And sure, the answer is more than likely yes. But what we have to do as investment managers is work out is there enough risk premium built into these markets, and particularly SA risk prices, to justify the risks of investing in these countries. And we certainly think that right now, when we look at some of the valuations here in our markets, that there certainly is enough risk premium on the table to enable us to invest here in this country. We will be looking to host smaller, more interactive sessions for those clients that would like to get more insight as to how we actually manage money and how we convert what we've spoken about today and what it actually means ultimately for how we invest our clients' money in the portfolios. We will be looking to have smaller interactive sessions. There is some, I think, in the chat box, if you can please indicate on the left-hand side by posting your name and surname with the keyword investments. During that session, I've asked Paul Abrahams as one of our senior wealth advisors to join us for that session, where we'll certainly look to unpack how we structure our client portfolios. Please also note that there's 2 articles that JP has written in the past that we've attached to this broadcast. I'm not sure if you can all see them, but hopefully it should be on the left-hand side of your screen. And these are articles that JP has written in the past covering some of the topics that we have discussed today. JP, one final closing word from you.
No, thank you very much, Andrew. I enjoyed the discussion. Thank you for the questions, and thank you to all the clients who sent in questions. And please send more and interact with us. It's always nice to hear from you. Thank you.
Great. Thanks very much, JP. And thank you all kindly for joining us today. I really would like to say a heartfelt thank you for all the questions, and apologies that we weren't able to get to most of the questions. But as I said, certainly we'll be looking to host more interactive and smaller sessions where we'll be able to engage more with you on a one-on-one basis. So thank you all kindly, and enjoy the rest of your day further. Bye-bye.